Netflix shares plummeted and investors exited after the results were announced. Netflix stock lost more than one-fifth of its value on Friday after the internet television network missed its own target for new subscribers in the fourth quarter and guided much lower than views for the current quarter. On the stock market today, Netflix stock tumbled 21.8% to close at $397.50, a fall of more than 110 points. Netflix stock has been in a steep decline since late November amid concerns about slowing growth. It hit an all-time high of $700.99 on November 17. Los Gatos, California, based Netflix late Thursday said it added 8.28 million new subscribers in the December quarter, just missing its goal of 8.5 million. For the current quarter, Netflix forecast adding 2.5 million new subscribers. However, analysts had predicted 5.8 million net adds in the first quarter. Netflix ended 2021 with 221.8 million subscribers worldwide, with 34% of those in the US and Canada. Wall Street sours on Netflix stock. At least 9 Wall Street analysts downgraded Netflix stock following its fourth quarter earnings report. Of those, 8 went from buy ratings to neutral on the stock. One brokerage, Macquarie, cut its rating from neutral to underperform. Meanwhile, many analysts slashed their price targets on NFLX stock, some by $200 or more. Pivotal Research Group analyst Jeffrey Lodarzak said Netflix stock looks like dead money for at least 2 quarters. The company will need to show that there's still growth left in the streaming video market to get its shares climbing again, he said in a note to clients. Pivotal rates Netflix stock as buy, but Lodarzak lowered his price target to $550 from $750. Red flags in Netflix's fourth quarter report. Netflix's fourth quarter report raised several red flags, said Michael Nathanson, an analyst with MoffettNathanson. They included tepid growth despite a flood of new movies and TV series on the service. The company's lowered profit margin guidance for 2022 also is concerning, he said. Nathanson reiterated his neutral rating on Netflix stock and cut his price target to $375 from $460. On a positive note, Netflix delivered better-than-expected profit on inline sales for the December quarter. Netflix earned $1.33 a share on sales of $7.71 billion in the fourth quarter. On a year-over-year basis, earnings rose 12% while sales climbed 16%. Analysts had predicted earnings of 83 cents a share on sales of $7.71 billion. For the first quarter, Netflix expects to earn $2.86 a share on sales of $7.9 billion. That would translate to a 24% decline in earnings year over year on a 10% increase in revenue. Netflix stock is the IBD stock of the day as a lesson in the importance of sell rule. Follow Patrick Sites on Twitter at @IBD_P Sites for more stories on consumer technology, software, and semiconductor stock.